is the magnet.
It is the Magnates, and we are here this time again to rub minds, to share thoughts. We're still running the series on ethical finance. Ethical finance is a very broad space, and we have been very patient to seek out this resource person, this magnate. We have finally gotten to share thoughts with us. It's a great pleasure to welcome you to this week's edition of the program. And just as tidbits of our magnates, and we'll be back to continue our conversation. I say continue because it's the same person we had last time. We'll be back shortly.
BASHEER OSHODI, PhD, has over 2 decades of work experience in banking, real estate, and the academia. He is the chief executive of Trust Author, a fund management company, advisor of a UK Sharia-compliant real estate fund. BASHEER is currently the president of the Non-Interest Financial Institutions Association of Nigeria, NIFIAN.
Are you thinking of starting a business or even growing your business and wondering how to go about it?
There are 2 or 3 major requirements to start a business. Startup capital naturally differ from one type of business to another and from one size of business to another.
Join Idris Shaibu MNI on business mentoring segment in the TV show The Magnet.
No matter how small a business is, whether nano, micro, small, medium or large enterprises, you must, as a matter of priority, commence and start with bookkeeping. The higher the risk you take, the higher the likely rate of returns or money you will be able to make.
The Magnet shows every Tuesday at 8:30 p.m. on DSTV 369 via NTA 2. It is indeed super mentoring on television.
Welcome back. The Magnet is the program. Permit me to welcome back to the Magnet Dr. BASHEER OSHODI. He is the Chief Executive Officer and the man at the helm of affairs of Trust Author. You are welcome to the program again.
Thank you very much, Treasure.
Always a delight to have you, eh? Right. The other time we talked copiously on ethical finance, but the other aspect of ethical finance will be ethical or halal investment, permissible investment, the way you call it, right?
Correct.
So what's the difference between ethical finance or now singling out investment aspect of ethical finance? What does it mean?
Now, if you're doing equities, right? So the difference between equity and equities, right? So the equities market, basically stock market. If you're doing stock market, we can identify companies that are Sharia compliant. I'll take that first, right? Now, you know, of course, to identify companies that are Sharia compliant means that within the universe, that is all the companies that you have in the stock market, right? We need to pick out some that are compliant with ethical principles. Now, that definition again is a function of, you know, the perception of, say, AOFI standard, that's one of the global non-interest banking standard, or the IFSB standard. AOFI is accounting and auditing organization for Islamic financial institutions, and IFSB is Islamic Financial Services Board. But these are 2 global standards that we use. So they say, okay, no problem. Now, if you put part of your money in government bonds or government securities, or even investment in non-interest or other interest-based banks, 30% or less, or 33% or less, right, is still allowed, right? If you take debt, interest-based debt from conventional banks, right, up to 30% or 33% of your market capitalization or total asset also allowed. Now, so on the back of this, so on the one hand, you're not even dealing with interest-based entities, you're taking them out. But on the other hand, even those entities that are compliant, you're then screening them further based on certain financial indications, right, to make it compliant. And lastly, some scholars will also say, you know what, you've even passed the first 2 tests. You know, you're not dealing with financial institutions, you're dealing with regular companies. But the 3rd stage is perhaps the director in a sugar making factory, right? is buying ammunitions and sending to whoever, right? On the back of that, you can also then discard the entire company as a compliant company, right? So these are the 3 levels. The third one is not very common. That's for equity. However, globally, out of all out from the big universe, from the big number of companies that are available, it's only less than 10% of them that are Sharia compliant or ethically compliant, if you like. Now, in Nigeria, we have the same experience. Today, we find less than 20 companies in the stock market that I can invest in. Out of these 20 companies, by the time you subject to the second level I talked about, the second level of screening, the financial screen, you'll be left with just 4 or 5.
Wow.
Yes, at every point in time.
The whole Nigeria.
The whole of Nigeria.
Wow.
So that then means that market is small. Then, of course, because of volatility in the stock market, right? It means that when there are spikes or things go down, when it's volatile, it means you may lose income, right? And that's why what happens practically is that investors, fund managers don't put all the monies in one portfolio. Okay. They spread them into several portfolios. So I only talk about one, equities.
That is exactly what I want you to really dwell on. When you say equity, you're taking it for granted that everybody, financial inclusion, you remember?
Yes.
So let's really know, what is equity?
So when you say equities investment, we're basically talking about the stock market. Okay. Basically, stock market, right? When you say equity investment or private equity, I'll come back there. I'll come there. I'm done with equity. So in the equities market, another similar investment is REIT, Real Estate Investment Trust. Real Estate Investment Trust falls under the equities market. The only thing is that they're dealing with listed real estate companies. In some jurisdictions around the world, they allow entities that are not listed. In Nigeria, mainly, you have to be a listed entity. That is, you must be listed. You must be a PLC, if you like. You must be on the stock market.
Must be a big player.
You must be a big player. Now there can be equity REITs and mortgage REITs, right? I don't want to go into too much details.
Or technicals.
Exactly. But the point is that equities market also is subject to volatility, market volatility. So that's on the one hand, equities. Okay. Another form of investment can be equity-based transaction. Now, equity-based transaction, I have a very high risk, high reward. It's like your startups. Your equity. If you allow me to use the terms, the likes of partnership, joint ownership, and equity participation kind of investment. Now, these transactions means that you gain the rewards if it's profitable, and if there's a loss, you also absorb the loss, right? Again, for every 10 companies you put equity, you take equity position in, maybe 1 or 2 will be successful. Okay. 1 or 2. So it means that one needs to also be very careful in that space so that you invest appropriately. Again, it's more pronounced in our own economy. Even advanced economies like even the US and European countries, you still have this challenge. How much more our own country with stability and all of that. Now, you can also have a real estate portfolio or investment. Now, the real estate one,
I hear that's where the cash is.
It depends on the way you look at it. So when there's price risk, you're exposed to price risk, and of course inflation and exchange risk, what we call predictable surprises. When they hit you, such as of course MPR, monetary policy price, and all of that, rate. When those prices spike and inflation spikes, I already put a price on your real estate on the unit. It means that there'll be stability. So it then means that even that can be dangerous. Now, when you deal with clients, I wouldn't say they're not ethical, they are, but they may not be financially literate. Like we discussed the other time. So you can imagine you put, for example, 5 billion, 3 billion in the real estate project, and the owners of the project take that profit up front. Right? Wow. So you can say that even though they've gone to good schools,
high risk.
They're still not, the second largest, real estate company in the world, real estate development company in the world, in China, went bust, right? Not because of anything, they were overtrading. So even as a real estate person, you can overtrade, and when you overtrade, it means you're
neither here nor there.
Exactly. I don't want to use technical terms now, but you have more loans than your receivables, and money they're expecting to come in. So at the end of the day, that transaction may be very bad. And again, because of cost of funds, which can be constant or may rise, It then means that the longer you don't finish the project, the more it becomes unviable.
Okay.
So in that way, I really say it's a very viable business. The function of the party, the character of the parties, that then determine whether it's going to be a good business or not. We've all made the mistake in the market, right, on real estate. Right, so let me quickly move to another commodities. Again, like I say, risk asset means that there must be production back end. You're giving money to farmers to produce. If they produce and some guys go there and drive everybody away and kill everybody, you're not going to have crops. Nothing is going to grow. Right? So that transaction will go bad. Right? And so investors want to play in the commodity space rather than the production state. Production, I mean, I have a friend, he had a farm, a lovely farm.
As an agro-allied now.
Exactly. And this guy said he drove him out of his farm. They drove him out. And when they drove him out, he had to leave the town. He went to, he left wherever he was and moved to another city to start doing real estate agency, right? Now, when you have a lot of people experience that, it then means that production then is a very volatile space. So non-interest banks then like commodity markets, right? Commodity, that is just buying and selling, local or foreign. Again, that has got its own challenge. So for every transaction, it comes with their own unique risk. And they're also exposed to volatility. So those are the broad asset class,
okay,
that you can put in, investment.
How have you been able to mitigate the various challenges in the ethical and the ethical investments, as it were?
Okay, thank you very much. So, so as a fund manager, we basically invest people's funds in different portfolios.
Okay.
And we want to ensure that we spread those investments, so for us, I think our interest has been mainly sukuk, real estate, commodities, and of course, you keep some investment as cash. You simply invest in non-interest banks. Because when you invest in non-interest banks, it means that anytime you want to redeem, if you like, you want to break the investment, you want to stop the investment, you can easily get your cash back, right? Again, there could be penalty if you invest for 90 days, and after 60 days, somebody say, I want my money back. It means you have to go and liquidate that investment. Now, if you invest somebody, they can also have a sukuk back note. Again, I'll talk about that subsequently. But if somebody invests their money in sukuk, and the sukuk is for 5 years, that's hold on to maturity. They say you want to go to the secondary market to liquidate, or to sell, right? So it means that, we're not going to be responsible for that. You just go to any of the exchanges, I don't want to mention the names now. Go to the exchange, you get your cash back, and you're free. But so what we try to do most of the time is to put funds in at least 4 asset classes before you spread it. The longer the fund, the better the returns. So if you
naturally
exactly. So if you give me a 1 year money now, or 365 days, and I'm supposed to put it in real estate, or you give me money for 2 years, I'm supposed to put it in real estate. I can patiently monitor the thing, ensure you get good return. If you give me the same amount for just 90 days, it means I have to go and place it somewhere else, right? So your return automatically will be lower because I also need to make a very small spread, right? And that's the reality market. Now, asset management companies don't create assets. We don't create risk assets. We don't give out loans, right? So what that then means is that, it's only the bank that can play in that space. So the bank can play in that space. You give them your own money, and the banks can as well create portfolios, right? Another very amazing portfolio I've discovered, first from research, and again back to phenomenology practice, and if you like, let me also use this word we call critical realism, right?
What's that?
Critical realism is when you mix empirical research with the actual and the real. On the one hand, you have empirical research figures. On the other hand, you then practicalize it and you experience reality. It then gives you the actual result.
Are people really investing enough? People don't even think, maybe just to keep somebody can even keep his or her money in the bank for years and just be idle. That money can be invested, right or wrong?
Correct.
Yeah. Let's go for a short break. We'll be back.
Today we will be looking at an aspect of business that seldom businessmen and women consider serious. While growing up, I used to manage a shop that was owned by my dad. Subsequently, after he passed on, he died in 1975. While in the university, I was managing my elder brother's shop, and we were selling fabrics, yards, guinea brocade, upprint, and the rest of them. I was a student of accounting, and then whenever I'm on holidays, I come to the shop and I run the business, and the only records we keep were two: those that the business owes money to, and those who owe the business. We never had, any record that we kept as to how much do we buy this item, how much are we selling, are we making profit, or are we, not making profit. Now, what am I trying to say? Dear entrepreneurs, it is extremely important, no matter how small a business is, whether nano, micro, small, medium, or large enterprises, you must, as a matter of priority, commence and start with what? With bookkeeping. Let's give an example. Would say a bole roasting woman along the street of Lagos. She goes into the market to buy agade, that is the raw plantain, and then she didn't record how much she bought it. She took a bike to the market. She took, say a keke marwa, a keke napep back to her house. Those costs are not recorded. The cost of her time is not recorded. And then she comes in, she buys charcoal and the other materials she uses in roasting the bole. All those are not recorded. And then she peels the bole, she starts roasting, and then she starts selling. How does she determine what price a piece of bole should be sold? If you don't record these little expenses, including even the storage and the consequential losses arising from either spoilage or damage or getting rotten before you eventually sell them, or other losses that may be occasioned, you are not likely going to be operating at a profit. I hate to mention names, but I have seen a situation where lack of record keeping, lack of appropriate costing, made quite a number of businesses to go under because they were operating successfully, but they were leaving money on the table because they were not appropriately pricing their products. No matter how small your business is, no matter how minute your product is, try as much as you possibly can to keep records so that you will be able to appropriately and adequately price your product and then be able to earn profit so that the business can sustain itself, so that you can get some money to be able to eat, so that even the business can blossom and wider. Because if you are not making money, how do you organically grow? How do you sustain yourself? If you don't take time, you will just be eating your capital without you knowing. As you continue to watch us, you will hear more, you will see more, you will know more, and you will become even a better businessman or woman.
It is mentoring on television. We're lending a voice to the growth of your business. Of course, it is all about business, how to grow your business. This is the MAGNATE, and we are still sharing thoughts with an icon of an Islamic finance space. I hope you took tips from Idris Raibu on the mentoring segment. Dr. Bashir OSHODI is still here with us. Thank you for joining us again.
Pleasure.
Now, there is a pending question. How literate are people when it comes to permissible investments?
Now, just like we discussed sometime, in the global banking space.
Investment this time?
Investment.
Permissible investment. Yes.
Yeah. In the regular investment space, a lot of people don't even know about it.
Exactly.
Those that participate in all of these investments we're talking about, they're so tiny.
Very tiny.
They're probably the 1 or 2% at the top of the pyramid, right? So when you now say Sharia compliant investment, it means it's extremely tiny. Now, in relation to Islamic finance, yes, there's a relationship, because one of the things that we don't allow in alternative finance or ethical investment is I'll keep it simple, uncertainty and gambling.
Okay.
You know, uncertainty and gambling. You know, I'm trying to avoid the Arabic terms now. You know, uncertainty basically, you know, what we call garar now, is when you invest in transactions that are not defined.
Certain.
You cannot buy what you don't have, right? So in the case of the collapse in the global, you know, market then, you know, people were trading what was not theirs. You know, the mortgage was created in the US. Somebody in London created a note out of it. Somebody in Hong Kong created another note on the back of the one in London, and somebody in Japan then created another portfolio on the back of the one in Hong Kong. So you can see that, and everything, and the real online asset is asset in the US. So, and of course, insurance company, maybe top insurance company in the US, you know, insured all of these things. So at the end of the day, there was a collapse, like I mentioned earlier on. So in our own case, because non-interest banks globally, we're not engaged in uncertainty and gambling. By gambling, I mean that you put your money in a portfolio, you put different people money in different portfolios. Somebody gets everything, somebody loses everything. You know, all called mystery, right? Gambling. You know, so those two elements are things that are prohibited or you should avoid in the Islamic finance. Because global non-interest financial institutions avoided those markets, they were not affected. They were highly affected.
Okay.
They were highly affected. Even though I mentioned earlier on, or sometime when I talked about the fact that maybe a certain percentage of a global fund will be invested in non-compliant portfolio. Let's just say 5%, for example, you get income of 5%. So assuming you are sitting on, I don't know, $100 billion worth of portfolio, I had invested just 5% in what is not compliant, the impact will be very low. So even where the non-interest banks invested in such portfolio in the global market, because Nigeria had not started at that time, you know, the impact was very minimal. You know, and so a lot of non-interest banks stood firm. On the one, on the other hand, there's what we call equalization reserves. You know, what we call profit equalization reserve or investment risk reserve. That is from your gross profits, right? Non-interest bank will keep some money in a cooler somewhere. You know, so that when there are shocks, and this money can be kept for 20, 30 years. And so that's the experience. Because they had this money sitting down in these portfolios. Exactly. They were able to use that to reduce the impact of the meltdown, you know, where they were slightly exposed. And also what we call investment risk reserve. That is where the return that accrues to the investor, part of it is kept for him or her.
Let's look at the ordinary person there who would not think investment company like yours can help them with their investment. Some people who allude to, should I go and invest in cocoa, for instance? Should I go into rubber production and all of that? Is that worthwhile, even though it's not an immediate profit because of the gestational period of these products?
The thing is what we call investment risk or equity risk or business risk. You know, you can put your money in a farm or in a particular production directly into a real estate project or directly into whatever. You know, you are exposed to business risk. The risk that business will collapse. Investment risk, the risk that investment will die. You know, there's someone I know, you know, he sold his house, you know, he went to put it in agricultural production. Of course, the house was collateral. No, I think, you know, he sold his house actually. He was thinking he would make a lot of money and buy another house. He lost the investments, he lost the house, of course.
Wow.
Yeah, so that's investment risk. The risk that you can lose everything. Right?
And our risk capital is very low.
Exactly, and that's why you have you know, investment banks like ours, where you have experts that have passed through Security and Exchange Commission exam. They pass through these exams. You know, they have experience. And you can also rely on other consultants. You have the advisory committee of experts. You have the board investment committee, and of course the board. You have a lot of people to decide whether you should go into that investment or not. Sometimes the investment looks good on the surface of it, but the director in the company will say, "Oh, but I think these guys." 5 years ago, 10 years ago, 15 years ago, they messed up big time, so let's not invest there, you know. So that's the kind of wisdom we get from this governance process. And in the same way, on the other hand, when you have experienced a particular failure in a particular investment portfolio, you know, you avoid it subsequently, right? So that's what you get from an organized institution. Rather than say, oh, these guys are my friends, they're doing fish farming. I mean, a long time ago, a lot of people, I remember those days, you know, all that institution belongs together. You know, they put money in fish farming, they all lose the money. You know, because you're taking the risk of that person. And that person is not financially literate. He doesn't know how to separate the books, he doesn't know how to, you know, a lot of these guys just think the income is all theirs. They forget that they have to also earn salary. and keep the company's money aside.
Any final word on this particular topic?
Okay, I think for me, again, I want to stress so much on that financial literacy in terms of investment, if you like investment literacy now. To say that, you know, anything you want to invest in, it's good to at least have a feel of it, you know. There's what we call yield curve. Have a feel of the yield curve, the if you like, the flow of profit over a long period of time. So it says, what we then do is that when you look at it, you then see that, okay, why was there a spike in this particular month or year? Or why did everything go down in this particular year? So you look at the conditions that create. Is it government policy? Is it global pricing? Is it the war in
environmental?
Or wherever? Look at all of these things to give you that idea.
Thank you so much. It's been Dr. Basheer OSHODI, the Managing Director, Chief Executive Officer of Trust Author. They are a reputable investment company. Halal, permissible. Thank you so again for coming on the program.
A pleasure.
It's been the Magnate. If you want us to bring you this quality conversation, same time next week, the only way you can do it is to stay tuned. And remember, you can also watch a later version of this program on our YouTube channel. Remember to follow us on all our social media handles. Make it a date with us same time next week on the Magnate. Until then, bye for now.